Good evening to all of you. Welcome you to today's webinar. Today we are going to look at the PSU and pharma stocks or Bs. The reason why we have taken this is that this particular quarter the results have been extremely good for PSU and pharma Bs, for pharma stocks. So as we discussed yesterday, it is better to invest in broader indices even if it is sectoral index rather than doing it in individual stocks, because individual stocks carry higher risk. Now sectoral indices is itself slightly higher risk compared to the broad index, because if you take Nifty, in Nifty you will have everything like there will be PSU stocks will be there, pharma stocks will be there, IT stocks will be there. Today IT went up, right? So sometimes you see there is a sectoral rotation depending on some news about the particular sector or about certain stocks. Because of that, that particular sector may do well for a limited period of time or even for a few years. But after that, there can be a downturn. Now, 2-3 years back till last year, you see the auto stocks were not doing that well, particularly in that period of 2019. If you see even big stocks like Maruti, in the 2018 December to 2019-20 period, auto stocks were not doing well. But after that, the last 1-2 years, particularly the last 1 year or so, auto stocks has done extremely well. Similarly, if you look at the metal stocks like Tata Steel, which was doing very well till just before around the pandemic time, the last 1-2 years, it has not performed. So sometimes, even the IT stocks for that matter, if you look at the Nifty IT stocks also or Nifty IT also, there has been no great performance for the last 2 years even when compared to the broad index. So there is a chance that we may get stuck even in sectoral indices, but still it is better than doing investment in individual stocks. So if you feel that the pharma is going to do well or pharma is doing well, the results are good, then in that case the first step that we have to take is to look at a broad sectoral index, which could be a pharma Bs. Similarly, when you come to PSU stocks, there are many PSU stocks which are even now undervalued. But for the last 1-2 years, if you see, the PSU stocks have done extremely well. We are not talking about only PSU banks. Nifty PSU bank is another subsector out of the Nifty Bank X index. But Nifty PSU, when you talk about it, it includes major PSU stocks like Coal India, REC, then Power Finance Corporation, Oil India, ONGC, BHEL, BEL, NTPC, SAIL. So there are many such PSU stocks which have not been rated very well till now because of so many reasons, probably due to regulations, due to the performances, all those things. Now, if you identify that PSU stocks are now doing well, then in that case you can start in looking at the investment in Nifty PSUs. Then also you look at the results. So quarterly results, every quarter results will give you guidance of where to invest at least for the next coming period. So we have to understand that particular sector, how it has performed even when compared to the Nifty. Suppose in Nifty, let us say the last 1 year or so, see last December Nifty EPS was something like 820, 830 approximately. Now today they are talking about 930, 940. So if you see something like 13 to 14% EPS growth is there in the overall thing. But if you look at the individual ITs, probably it may not be there. IT stock may not have given that much of this one, but probably the banks might have delivered. Some other stocks in that particular thing would have delivered. So a combined thing has resulted in the EPS push, because if you look at there, probably some of the PSU stocks also might have given good return, or PSU banking stocks also would have given return. So overall, if you see the EPS growth is something like 13-14. That is what we were saying yesterday also. If the Indian economy is growing at 6.5% with an inflation of around 5%, 11.5 to 12% should be the broad EPS growth should be there. So based on this, now we have to only look at the valuation and do some multiplication, and then look at whether the index is overall where it's valued or no. Similarly, you can also look at the how the growth in this particular sector is. Like for example, in the case of a pharma, or in the case of a PSU, public sector enterprises. Let us say whether that EPS growth is better than the Nifty EPS growth, and whether that is getting maintained now with the overall average above the Nifty index. Then in that case, you can look at that particular index. Now, if you look at IT, which was performing till very recently very well, has started to trail, because the EPS growth in IT, most of the stocks is around 6-7%, 8% like that. So it is even trailing the broad index. So in that particular case, you have to have an anticipation that you will start doing well, and then look towards buying that. But if you look at the flavor of this particular time period, that is, you are also looking at momentum, because there are different styles of investment. One such style of fund is the momentum, right? So where is the momentum in that particular period? So you identify that through your own analysis, and then look towards investment in that particular sector. We have already talked about there are different asset classes. In that asset class also, there are stocks which give a higher return than the market. So that is where we call the alpha, where the return of the stock is in excess of the index. So there are some funds which take these particular stocks which have done well, or in their anticipation is likely to do well compared to the normal market, and start investing in that to give you a higher return. So if you look at most of the mid cap stocks are like that. For example, if you look at Cholamandalam Investment, TVS Motors. So these stocks in the mid cap sector has given a higher return than the market. Even when compared to the mid cap index itself, it has given higher return. So there are funds which keep selecting these type of stocks. Similarly, you look at the Bs, or there is the pharma sector. In the pharma sector, you can identify some of the stocks which are doing much better, or whose results are even much better than the index. The alternate style of investment could be is look at the undervalued stocks. Undervalued stocks, and those stocks you go for a pick. Now, couple of months back, Coal India was trading at 210, 215, 220. So that time it was a fantastically available at a much lower valuation levels. Many PSU stocks, even a couple of months back, was available at a very lower valuation. So now what you have to do is that you have to look at which are the real undervalued stocks, and look at investment in undervalued stocks. So there are different types of investment style. One is look at the undervalued stocks and start looking at, because the risk is less and the safety net is high. The other alternative is that you go with the momentum. Right now, you go with the momentum which is there, the flavor of this particular quarter, whichever is there, you make higher return in that particular thing, and then when you get higher return and looks like coming down, you get yourself out of that particular index or the particular stock in which you have invested. And in this particular category of where the momentum is based on the results. So if you put a screener and say which are the sectors and which are the stocks that have done well compared to the broad index, or which have done on a quarterly basis, or even on a sequential basis, or on a year-on-year basis, which is the sector which has done higher return than the market. Now I illustrated Nifty as around 13 to 13.5% EPS growth. Now look at the sectors which have done well. For example, it could be a pharma sector, it could be the PSC thing. Now in that PSC, we heard that we saw RECL, that is Rural Electrification Corporation, Coal India, all getting giving much higher return growth, EPS growth compared to the broad market. If that be the case, then you shift your attention to that. Okay. So sometimes we see those stocks giving very good valuations, but at the same time they are also paying good dividends, but those stocks are not doing well. This happens for some years. Now, some of the PSU stocks are extremely good dividend paying companies. For example, Coal India. Then look at even Oil India. So most of this ONGC. So all these stocks are even refinery stocks. These all pay very high dividends. So normally when high dividend stocks, they say that probably the stock growth may not be that much, because you are getting a return in the form of dividend itself. So why should there be a very high return in the stock? But recently we have seen that along with the dividends, stocks like PSU stocks, some of the PSU stocks have done extremely well. So we have to wait for some dips for those stocks which have already run well to buy again. So in that particular category, as we have been saying, that these two sectors which are now looking at Nifty PSE and Nifty Pharma. So first let us look at statistically how this return has compared to Nifty in the last 1, 2, 3 and 5 years. Now let us look at this particular period. Now first we will look at Nifty. We will put it like this: 1 year, 2 years, 3 years, 5 years return. We will look at it. Absolute return also we can look at it. Then public sector enterprise Bs, PSE Bs. Then Pharma. So let us look at how this return has worked out. Okay. So Nifty compared to last November, present rate, whatever it is, we will first look at the chart. So this is we will go to the monthly chart. So Nifty in November 2022 was 18,758, now 19,765. So this was now is 19,758. It was 18,758 or so. So just 1,000 points. 1,000 points means approximately 5%. The last 1 year, November to November. This November, last year November was no, it has been just yes. So last number is 18,758. Now let's look at the 2 years back. That is 21 November 21. November 2021 was 16,782. 16,983. So approximately 2,800 points now. So absolute return is 16%. I am putting the absolute return right now. Okay. So 2 years, this is absolute return. Okay. So 3 years. 2020. 12,968, approximately we can say 13,000. So 6,700 divided by 13,000. 51%. Absolute value. Okay. So 5 years. (2018) 10,876. So we can say 8,900 points divided by 10,876, which is 82% absolute value. Okay. So similar thing, we will look at the Nifty Pharma and Nifty PSEBs. First, to understand that how the past performances is and how it is moving right now. Nifty PSE. Okay. Now 2022 November. That time it was 4,455. So 6,471 divided by 4,455. It is 45% the last 1 year. PSE. Okay. So last 2 years, 2021, it was 3,820, now 6,471. 69% absolute value. Okay. 3 years back, 2020, 2599 6471. 148%. 148%. Now 2018 November 3212, 101%. So very clearly in the entire period 1, 2, 3 and 5 PSUBs have done well. So much higher. So in the case of 1 year, 2 years, 3 years, it has bet Nifty significantly, and even over a period of 5 years, it has given an extra return of another 2-3% on annualized basis extra. Now let us look at Nifty Pharma. So 2020 15,651 divided by 13,144, 19%. 1 year. Two years. $15,651 divided by 13,662, 14%. Okay. Period of 3 years. Now we'll go to the 2020. $15,651 divided by 11,839, 32%. Okay. Now you look at the 5 years period, 2018. $9,275, 15. 69%. So this clearly shows that pharma we have to be very careful, because in this 1, 2, 3, 5 years pharma has not done that well. PSE is the best. PSE is the best, and it has overtaken Nifty very significantly. Okay. So but in the last 1 year or so, the last 2 years, if you see, okay, not much of a difference in Nifty. The last 1 year or so, pharma has done much better. So that means there is a momentum now getting built as far as pharma is concerned. The momentum that is getting built now in the case of a pharma. But considering that it is not doing that great, we need to be quite careful about it. So it's a similar thing, because we have taken Nifty PSUBs, we can also look at PSU banks, only PSU banks, because these have revived in the last couple of years, and there are many stocks which are likely to still do well, PSU banks. So you look at PSUBs also along with this, PSUBs. Nifty PSU bank. So the last 1 year, $4,588 by 4,000, 30%. Okay. 2 years. $5,188 by 2,560, divided by 2560, 102%. Three years. 1588, 226%. Then 5 years, %78. So, when you look at over a period of time, I think Nifty and PSU banks, say over a period of 5 years, they have more or less performed similar lines. So, a longer period of time, I think probably it looks as if because 82% itself means it gives you 13% return. I think if you look at the yes, so this comes to a 13%. That is normally the EPS growth. There is a normal EPS growth for Nifty that is taking place. Okay, so 12 to 13% over a period of time happens. 3 years pandemic low is there. So these 2 years, it is just compensating for one particular year's abnormal increase. So if you look at these sectors, you can put even Nifty IT also, so that you will have another important sector to compare, and then look at why the momentum is now getting built still in the favor of PSEBs, and we just bet in all the 5 years, 1, 2, 3 and 5, they are given tremendous return even when compared to the normal Nifty. So if you look at the Nifty IT, let us look at what has happened here. CNS IT, this is okay. Now divided by 30,391, 6%. Because of today's performance, that too. Otherwise, it would have been much lower. 2 years back, that is that has given even minus 35,000 minus. It is minus 8%. 2 years time, minus 8%. So let's look at 3 years. %48. Five years period, 638. %120. So, in the last 3 years, 1, 2, 3 years performance, this has really sacked even below the top Nifty index. But over a period of 5 years, it has definitely overtaken Nifty. Probably it would have given something like a 16% CAGR compared to this 13%. But Now there is a considerable slowdown. So if you look at the last 3 years performance, it is not great. So the last 3 years, 1 years, 2 years, 3 years, 5 years also, the general momentum has been in the PSUBs. PSU banks. So in the sectoral fund, when you are taking it, the PSE and the PSU banks stand out, and we can just have one look at the Nifty mid cap, whether Nifty mid cap and Nifty small cap, 250. So 1, 2, 3 and 5. Let us look at this return and see whether we can just concentrate only on this. Nifty mid cap 100. Okay. So 41,726 divided by 32,037, 30%. Okay. $41,726 divided by 29,650, 41%. In 3 years period. Divided by 19,715, 111%. Five years period, let's look at 2018. By 138%. Now, so if you look at this compared with any of this broad index, so Nifty broad index is given 6%, 16% here, 51%, 82%. So definitely Nifty mid cap over a period of this 5 years has performed well. Now we should only then compare this with, definitely the returns are much better compared to pharma and even IT. Question is that we should compare this now with, let us say, the best of this Nifty PSEs. Now Nifty PSEs as given, if you look at the 1 year 45% where Nifty PSEBs has done well, 2 years also it has done well, 3 years also Nifty PSE has done well, slightly overtaken this. So 5 years period, yes. So in a 5 year period mid cap has done well. So PSEBs still over a period of 1, 2, 3 and has done well, and even in a period of 5 years it is very close with the Nifty mid cap. So the momentum is still with the Nifty public sector enterprises clearly. So Nifty small cap, let's look at that. $12,933, 34%. Okay. Then 2 years period. $12,933 divided by 9336, 39%. Okay. So 3 years period, 5604, 12,933, 130%. 5 years the index is not there much. So this as small cap has done really well even when compared to mid cap. At least it has in the last 1 year, 2 years approximately the same, and in 3 years performed. So there is some maybe extra return of 2 to 3% on an annualized basis you can get in the case of a Nifty small cap. So if you look at the last 2 years return, it is almost double that of Nifty. Nifty is given 16%, right? Last 2 years, 16%. This is given 39%. So when compared to Nifty Pharma, also it has done well. So in this, probably the Nifty PSU banks in the last 1, 2, 3 years, I think Nifty PSU banks, Nifty PSUBs have done extremely well. Okay, but if you look at the last 5 years, then in that case we have the Nifty mid cap and Nifty small cap have done well. So longer period of time, look at 138, this should be also very close to that. So over a period of 3 years and 5 years, we don't see anything great even in coming from PSUBs, because they are almost slightly better but with some small risk. So at this point of time, the momentum is still in favor of PSUBs, PSU banks. Right now Pharma is doing well. So we need to be really careful about that, because then that means it becomes a very tradable thing. It cannot go for a passive investment. So passive investment can still come in Nifty, probably Nifty mid cap and Nifty small cap, because of the consistency of returns which has given. But in the case of Pharma, if you see, there is consistency is not there, 19, 14, 32, 69. But whereas if you look at the this one, consistency in return, this has been generally, it has done well. If you look at that Nifty mid cap over a period of 5 years, if it is 138%, then in that case it has delivered something like 17%, even more, 17 and a half to 18%. This has delivered something like 17 and a half to 18%. Whereas Nifty has delivered 13%. So there is a 5% better as far as the Nifty mid cap is concerned. So right now you can look at where to do the trading and passive investment. Now very clear that you can look at this one, and also for trading. At this point of time, the Pharma is doing well because it has delivered some good results now compared to even Nifty. So probably we have to look at the overall EPS growth which is now coming in the Pharma sector. Probably it can accelerate. So based on this, we should look at buying PSU banks on dips, buying PSUBs on dips, and buying mid cap and small cap. So our overall investment for investment and trading should be looked at mid cap, small cap, Nifty PSUs, Nifty PSUBs, and Nifty PSU banks, and probably Nifty Pharma for trading also presently. So of course in this particular PSU, some stocks would have even done much better compared to the index, but still index itself has given an excellent return, at least over a period of last 3 years. If not 5 years, it's almost the same like Nifty. So the tradable thing right now, the Nifty PSC, still then that means we need to come towards the valuation parameter. So we should look at where the values are, what has been the historical valuation that has been given, whether there is a rating valuation now being taken up for PSE stocks. So these things we should look at it. So overall, the approach is that even the government approach is more towards favoring PSU stocks, like defense stocks like BEL has done exceedingly well in that particular stock. Then if you look at the Power Finance Corporation, REC of the power generation, so if you look at Coal India, so these stocks have done exceedingly well, plus they are also given a good amount of dividend. So instead of trying to invest in a particular stock for because it is still risky, we can go for this. So then we will look at what is the way forward to trade this particular stock. What should be the approach towards trading this particular stock. Okay. Now then we should look at the easiest way, which will elaborate in coming weeks, is just use a pivot point formula and look at that for the entire year, what is the range, likely range, okay, and if it is going for a particular quarter, what it is, and if it is going for a particular month, what should be done. So based on this, you can look at the type of investment that you can do here. Now, of course, we have already highlighted that when the stocks are doing exceedingly well, we should be quite careful about it, because already most of the PSE stocks, I think they are extremely, the small cap and mid cap, they are saying that it is value is not there to the extent it is highly valued. And even if you look at the highest particular type of return that it can all give this, so in a period of time, probably in the next 1 year or so, the Nifty small cap and mid cap, since it has run up very heavily, there is a chance that yes, it can stagnate, because it has already given exceedingly very high return. So it has to normalize, it has to come towards some sort of an average. So in that particular case, whether we are going to look at the large cap stocks, whether that has to make a turn to give a higher return now compared to the mid cap. So that is a contrarian approach that you need to take, because right now the amount of return that we have already highlighted, that the maximum return probably can come what, maybe in the case of Nifty PSUs or Nifty mid cap or small cap, we have already highlighted in earlier webinars what is the extreme high 1 standard deviation or even 2 standard deviation return that it can give, which we have back tested. If you look at it, then in that case the performance could be another 8 to 10% is a possibility. So you need to be careful and do definitely a trading activity there also, because you cannot get the same return, because Nifty also happened 1 year back, 2 years back, the return was extremely good, but the return after that got moderated a little bit. Okay. So now we have already highlighted to what extent the Nifty can go, and we have already mentioned last time itself that it was in November 2021, the value is 17,850, right? Normally Nifty, at least for a period of 3 years, the minimum that it should give is around 20% absolute value. So 17,850 into 1.20, even with that, it comes to 21,420. That is why we said when it comes below 19,000, you get a chance of 10 to 11% definitely. You get a chance of 10 to 11% definitely. Okay. And anything more that there is a good possibility. So if when you are a buyer closer to the 19,000, the chances that within 1 year getting a 13-14% return is exceedingly high. So we should look at since the valuations are now acceptable as far as large cap Nifty is concerned, because Nifty now is trading at something like a 21 PE. Okay. So normally 20 PE is a long term average. So 2021, so the chances of under 2-3% dip if it comes, and if the Nifty stocks are going like this at 12-13% return, and with slight possibility of an increase in the PE because of the liquidity factor next year, I wouldn't be surprised that we get something like even a 20-25% return from this for Nifty. Okay, Nifty itself. So in a shorter period of time, taking a contrarian view, then you can definitely even look at Nifty itself, because it is a large cap thing. So small cap and mid cap have run exceedingly well. So as I told you, this is an alternate investment style, because the one is to go with the momentum, and the other is to look at what has not done well, but now it's likely to do well, so go for it. Now, if you look at the Nifty, we have already highlighted for the last 2 years it has not done that well. See, 1 year and 2 years it has not done that well. So, that means this has now not given a good return. The last 2 years it has not given good return, but a period of 5 years it has normalized. So, that means next 3 years, if it has to catch to the same extent of 82%, that is the 13.5% return that it has to give, then now it has to grow something like 60%, 66%, right? So 66% from here could definitely mean around 20% annualized from this. So even if it is not to this extent, even if it is going to come to 50%, so 60, 65%, let us say it comes to, even then it has to go by 35% in the next 3 years, which could be 10 to 11%. So I think the Nifty definitely will give you 11-12%. Possibility at one stage there it could even climb to 14 to 15 or 16% also per annum. So on the contrarian basis, this on the contrarian style, this looks to be a good investment. Now let us look at what can be done as far as the pharma is concerned. What is the view that probably we can take as far as pharma is concerned, even as far as the Nifty small cap and mid cap is concerned. Now we just use the pivot point formula to look at the overall yearly assessment. That is, we are looking at a bigger picture. Okay. So on the bigger picture, the Nifty small cap probably is heading towards 13,730, where probably it could meet some resistance this particular year, next 3-4 weeks before December end. Probably there's a chance that it can go up to 13,730 or so. And then after that, when it falls, probably we will have the same support. So mostly we will have this particular support, which is 12,130 or so, even next year. There's a chance that probably we still could be this particular one, that is getting closer to the 13,730, and probably it could have some rest from there, and from there if it has some sort of a fall, then probably we don't see here it was a clear case that Nifty from 10,524 it fell to 7,594, so 23-25% fall. So that is on a slightly deeper correction of Nifty. If that is not going to happen, then Nifty probably in this time it corrected by 8-9%. This time, whenever there was a correction here, it came down by around 8 or 9%. So always there is a chance that a 9 to 10% correction is possible, and extended correction could be around 13 to 14% correction is possible. If that be the case, from 13,731, it can still drop down maximum around to 12,127, because that will represent around 1,500, 1,600 points, 12 to 13%. So right now it's at 12,933. So at this point of time, we could just still buy on dips. And since we have put a monthly range right now, I will just go to a weekly. So this particular month, what could be the range? So we have seen last month, this market suffering 12,578 was resisted, and now it is flying towards the 13,130 levels. So 13,125, 130 could be the next resistance, and then it could just fall back to 12,578, 12,600. So there's normally a correction of around 4 to 5%. Normally is a definite possibility as far as the small cap is concerned. And this time the correction happened up to 8 to 9%. So I think we should keep something like 5 to 5%, then around 9% of correction is possible as far as small and mid cap is concerned. So we are looking at some sort of move up to this, and then probably have some sort of a fall up to this particular place. Now let us look at the Nifty PSEs, which is doing very well. we look at the bigger picture, so this year it has been a very spectacular performance, breaking every one of the barriers. Every barrier has been broken. So putting a resistance now in a very high momentum market should not take place. So we should only look at the overall picture and decide about how basically to trade the Nifty BSE. Now, in this particular period, we had a very small correction now. That is, in the last 2 years, the correction was 4,500 to 3,600. So around 20 points, 20% correction was there at this time. And at any point of time, see this last month when Nifty corrected by 7% or so, this corrected by 8 to 9%, 5,681.33 minus 5,632. Around it corrected by 8-9%. So generally speaking, the correction here is likely to get arrested around 8-9% of fall. So any momentum, this one, if it comes down by 8 to 9% from this particular level, suggests that we get into PSE stocks, PSE Bs. So allow it to go, and then any dips. Okay, I think Nifty PSE stock is worth buying. Okay, so every dip you look at the dip and then buy. So first correction by 8 to 9%. Then if it goes a little deeper, maybe 12-13%. Okay, so keep averaging it out at various levels. That is as far as PSE both trading and investment is concerned. Now normally most of this thing will not go down by more than 20-25%. It will not go. So even if you look at the Pharma, which has not done Nifty Pharma, over a period of last only in last 1 year or so it has started flying. So right now it is doing well. So in the last corrections, so when Nifty corrected itself by around 18%, let us see what happened. 14,938 and so minus 11,731. This also corrected by around the same 20-21% when Nifty corrected by 17-18%. So here if you look at the Pharma from this place, it is 15,667 minus 14,544. Corrected by 7%. Almost, so the Pharma stock is almost like the Nifty. So you can buy this particular also around the 6-7%. After a 6-7% fall, you can buy. And now the Nifty Pharma has started to go up. So we could probably look towards buying right now and keeping this month low as a very important low. And below that, I think it is though for those people who are looking towards chopping off their investment, if it is already on profit, they can take profits if it goes below the last month low. But those who are willing to stay invested, should buy on every dip. So you don't need to do any stop loss management because you are going to be an investor over a period of time. Most of the indices have fad, it has been on a positive side. So based on that, we should look towards buying on dips. So what are those? See, even in the case of IT, when we say that last 2 years it is given negative, that is because on a climb. When you invest on a climb, there is a possibility that it can happen. Okay, but after that, when it starts to fall, then in that case you should look towards some sort of an averaging out. So even if the Nifty IT has not fallen by more than 25%. So what we are trying to say is buy on any dips as far as investment is concerned. Particularly you buy after the index drops down by 7 to 8% or 10%, approximately 10%. Okay. Then after that you buy those indices when it goes down by another 2-3%. So every percentage of fall you keep on investment. Yesterday we talked about SIP as far as time period is concerned. Now, you can also do it on a percentage basis. So, the percentage basis of fall can come 2%, 3%. So, every percentage of fall like 3%, 5%, you keep investing. That cannot be done as far as stocks are concerned. But when you do it as far as the bigger indexes is concerned, definitely the fall in index generally will not, unless it is a pandemic or layman, it's a systemic crisis, it will not have a fall of more than 25%. Bigger indices also. Generally, it will be restricted to 18 to 20%. So, after that, because the companies do perform, so the index has to move up. Okay. So, once the valuation gets corrected from whatever higher level is, then it has to start moving to some higher level. So, whenever we get an index at some lower level, that is after a dip, particularly after a dip of 10%, 12%, to start investing, because in 1 year time, a 10% fall is nothing but because if the 10% fall is going to come for various reasons. It is not going to come only for sag in corporate revenues. Now, if the revenue, if the profit is still going to go at 12-13%, if the index is going to fall by 10%, then it is as good as around 20-22% fall, because it normally what has to go by 13%, now it has come down by 10%, means 20-23% fall has already come. So, that is the basis on which the investment goes. So, anything which is about the 13% rise. So, normally since the market has to grow by 13%, any 10 to 12% fall itself means 25% fall, right. So, it should not go much below that. So, maximum that you can look at is around a 10%, 12% fall. So, that is also so that is also a chance of only 15%, 20%. Okay. Getting a chance of more than 10-12% down is going to be hardly 15%. So, 85% of the time the market will have to rise from where it is right now, from where it is right now. So, that means always your investment should stay invested. Maybe the returns probably in some years it might not have given much higher returns, it might have got some dips, but so if you get a dip, as I told you in the case of SIP, you keep increasing your investment so that you keep averaging it out. We have already discussed this, we will again have another session further. So, if you have any doubt right now on this, please ask. Thank you. So, a friend has asked what is Nifty's trend tomorrow. So, Nifty, okay, we will go to Nifty since the day trend is asking. So, Nifty fell the last 5 minutes after touching important weekly high, which is 19,875. That was an important resistance place, and it has fallen today to 19,722, 730. On the day we expected that it should not cross much below 19,735, 736. So, that has happened right now. So, we should see the first one. We will look at the hourly chart. So, 19,840 and 850 is in this particular week there was a resistance. So, we should expect the first support to come closer to 19,700. So, this particular place where there was a big rise of 19,705. So, that should provide some support. So, 19,698 or so we expect support, and worst come worst is 19,611. So, that we do not expect it will come very closer to that. So, 19,700 is where we are expecting strong support to come. And let us look at the so, as long as it does not fall below 19,540, I think you can stay invested. You can stay invested, and we will also look at okay. So, support can come. I would prefer to buy closer to 19,664, 665 with a stop loss below 19,599. So, buy closer to 19,664 and put in a stop loss below 19,599 for the market to move up. Okay. So this is likely to be the Nifty trend. So tomorrow we expect that it could be 19,600 to 19,745 if it has a fall. Otherwise, it can rise from here and then probably have a resistance toward 19,850. So where will you buy? Question is that it is better if you buy closer to 19,664 and put in a stop loss below 19,590. Okay. Thanks for your questions, and we shall see you again next week with the of this particular topic.